No, I mean, look, the reason we said July 2nd, it was a good take because the way that the amount of edits the documents needed were so small in June that they could have easily done it. And this was the feeling that people in the know that was what they felt would happen. The idea was just to get it done before the holiday. Then you could just go on your holiday and have this off your plate if you're the SEC. Anyway, they're really taking their time. I don't know why. They might just be feeling lazy. There could be people out on vacation. I don't know. There's also a theory that there was one issuer that just didn't have their S1 quite up to speed, and theirs did need a lot of work, and they were slowing the pack down.
Bitcoin Zella stands out with its simplicity and clarity. We've crafted an experience that anyone can dive into, whether you're a crypto expert or just a new to the crypto world. Now guess who keeps his eye on us? The author of best-selling book Rich Dad Poor Dad, Robert Kiyosaki. And we want to take this opportunity and thank all the people who trusted us, and we read every comment. And the best part, it's free. Subscribing now means you will get all new information for free. Don't just follow the trends, stay ahead of them. Subscribe to Bitcoin Zella today and enjoy the new edge. In today's video, Balchunas and James Seyffart, Bloomberg ETF analysts, discuss the upcoming launch of the Ethereum ETF, Bitcoin's price falling, whether is Bitcoin a store of value or a currency, and more.
I can't confirm what theory is true, but either way, the SEC took a little more time than they needed. So now we are waiting to find out from people in the know what the SEC is telling them. So I don't think the SEC has gotten back to the issuers yet, but when they do, they're going to give them a game plan, I think. They're going to say, okay, here's the plan. You guys are going to send back your documents. We're going to make them effective, and then you can launch on Thursday, July 18th. Something like that. And that is my new ballpark, although it's just totally an educated guess. If like a gun to head, if you asked me to pick a date, I would say July 18th, which would be a week from Thursday. But, who knows? The good news is all the hard stuff is done. They're approved. This is just crossing T's and dotting I's and waiting for the government to the slow-moving government to finalize this. The documents that were, the people that got documents back, the comments back from the SEC and said, okay, submit these July 8th after the holiday, which was Monday. They said literally nothing. So, yes, they needed time, but I'm with you. They were caught flat-footed. You and I are both on the same page that this was political. There's no smoking gun, but all the circumstantial evidence is really good. But even with that flat-footedness, the first round is when they gave him like 6 or 7 comments. Those came back. It was this second round that was odd because the issuers were like, there's literally nothing and they don't need it for a week. And when they asked it to come back, they said fees aren't even necessary. So that to me seems like they were either occupied with something else during that little period and they're just like, we can't deal with this right now, so we'll just basically punt for 2 weeks. Or there is one issuer that is, slowing everybody down. But according to the issuers and the people we speak with, these could have been done 2 weeks ago.
Bitcoin is at a pivotal point, as several on-chain metrics signal further downside, while whales experience the fastest Bitcoin accumulation rate in more than a year, according to a new CryptoCoin report. Bitcoin has been in a downtrend since turning away from its new all-time high in March. Over the last month, Bitcoin's price action has been characterized by a series of lower highs and lower lows, reaching a 2-month low at $53,500 on July 5. Despite rebounding back above $57,000, continued Bitcoin selling by the German government and Mt. repayments threaten further losses for BTC. The CryptoCoin report reveals that the profit and loss (P&L) index is hovering around its 365-day moving average (MA). The on-chain data provider explains that if this index drops below its 365-day, Bitcoin could embark on a major correction as those seen in previous drawdowns. A crossover to the downside has been associated with major corrections, May-July 2021, or the start of a bear market, November-December 2021. See red circles. CryptoCoin's Bitcoin bull-bear market cycle indicator is also approaching a critical level and could switch to bear market if prices decline further. The chart below shows that the indicator is currently playing out in a similar way it did in March 2020, May 2021, and November 2021. A drop below the neutral line will mean that the market has switched to a bear phase, pointing to further declines. According to CryptoQuant, these two metrics show that Bitcoin is at a level where a local bottom can form or a major summer of 2021 style correction can occur. In addition, Tether's market cap growth is stalled, suggesting that a rally might be hard to come by as historical recoveries can be attributed to a rise in stablecoin liquidity. CryptoQuant added, growth in the market of USDT is often considered a key driver of bull markets. USDT market capitalization is still slowing down. Bitcoin price typically rallies as more liquidity enters the crypto market via USDT minting, a condition that has still not been met. Meanwhile, Bitcoin whales have been aggressively accumulating as the recent downswing gave large holders an opportunity to buy more on the dip, boosting their stack by 6.3% over the past month, the fastest pace since April 2023. CryptoQuant said that this indicates rising demand for Bitcoin at lower levels. This is corroborated by increased inflows into US-based spot Bitcoin exchange-traded funds, ETF.
This is so underrated. I've been trying to make this case about ETF investors for 20 years because sometimes the media will call them dumb money, mom and pop, and all this stuff. And I'm like, these are the smartest people. Why? They found the ETF. Most people get sold shit from their broker because they get kickbacks from crap funds. That's the way this industry's worked. ETFs don't have kickbacks, so you have to kind of make your way through the sludge and the intermediaries to be like, wow, this ETF is a great deal. It's cheap, it's easy, it's tax efficient. So you have to have a brain that knows that's the best deal. So the type of person that would invest in an ETF or use an advisor that uses ETF is pretty with it. And I really try to push back on this theory that they're dumb or they're like the GameStop retail or just some like random person. Now, I call them boomers. They're obviously all ages. But the majority of money in America is owned by the boomers. So the odds are it is a boomer. The other thing is, I think for the crypto crowd, anyone who isn't them is a boomer. I mean, my kid calls me a boomer.
47. I've been a boomer for like 15 years around here.
Yeah, so I sort of say boomer as like TradFi client type, right? And what was impressive about that drawdown, 20% is no joke, even though Cliff Asness said it's not that big of a deal for Bitcoin. But I'm like, it is a big deal for a stock and bond person. And 20% in a month is pretty nasty. And yes, there were some weeks and days of outflows, but even if we didn't take the last 3 days or 4 days where there was a nice uplift, it's still it's like flat or down a little. So what that tells me is what percent of people hung in there during the worst of the drawdown? Well, it's 110% because it actually took in money. But let's cut out the last week when it was good, and it's still something like 97%. So the fact that 97% of the assets hung in there net is remarkable. I would have thought 90, 93, and I would have said that's pretty good. But there's people out there, I won't name names, they act like 50% of the people are going to leave in the first drawdown, and clearly it hasn't happened. And I wish some of these people would just take the L occasionally and be like, you know what, I was wrong. They really hung in there. But they double down, and like I said earlier, it's like arguing with a flat earther. Like, I don't know what to do. I just showed you a globe. I got you all this data. And like, no, the earth is flat. Okay, I don't know what to tell you, so I don't even engage.
Ethereum started the year strongly, but began tapering off in mid-March. Although the Ethereum picked momentum in May amid anticipation of the approval of spot Ethereum ETF in the United States, it has underperformed Bitcoin. Ethereum has surged approximately 60% over the last 12 months, compared to BTC's 87% gain in their respective USD pairs. A new digital assets, insights and market trends report, a joint publication from CMB Group and Glassnode, reveals some of the reasons why Ethereum has been underperforming BTC throughout 2024, as discussed below. Data from Cointelegraph Markets Pro and TradingView reveals that Ethereum has experienced relatively deeper corrections in 2024, with the largest drawdown being 31% between March 12 and May 1. In comparison, Bitcoin dropped by 23% over the same period. Zooming out, the drawdown profile of Ethereum has experienced relatively deeper corrections compared to Bitcoin, with the largest drawdown in the 2022-24 cycle being 42% thus far. Previous cycles have seen corrections exceeding 65% during both the early and later phases of macro bull markets. The Glassnode CME Group report also noted that the Ethereum/BTC ratio has continued to decline during the 2023-24 cycle, suggesting that the general investor risk appetite is still low for the current cycle. According to the chart below, the Ethereum/BTC ratio has trended lower since the merge, marking a period where Bitcoin outperforms Ethereum, a scenario that is still playing out at the moment. The report records a number of reasons for Ethereum's underperformance, including the approval of spot Bitcoin ETF in the US in January 2024 and the increasing competition from other proof-of-stake blockchains. Nevertheless, with the inauguration of US spot ETF for Ethereum, this may create a catalyst for a reversal in this downtrend. And do not forget to subscribe to Bitcoin Seller. The most important news will reach your inbox on a daily basis and for free. I do not know why you have not subscribed yet. If you liked the video, give it a thumbs up and subscribe for more daily updates. Remember, knowledge is power, and we're here to empower you on your financial journey. Until next time, happy investing.